Though the health and economic impact of COVID-19 has dominated discussions on mainstream and social media, the government of St. Lucia has been planning for the upcoming hurricane season, which officially commences on June 1st. Government, under its disaster risk financing policy, has increased St. Lucia's coverage with the Caribbean Catastrophic Risk Insurance Facility, CRIF. Deputy Director of Financial Administration in the Department of Finance, Matthew Branford, said government has ensured its disaster risk policy has been updated in keeping with a projected active hurricane season.
We've actually increased our coverage because based on the various models for this year, they have increased intensity for the hurricane season. And so we have actually been very cautious and have expanded our coverage. So we've actually transferred more risks to CRIF so that it can alleviate any fiscal pressures in the initial stage in the aftermath of a disaster.
Branford noted that St. Lucia has been a member of CRIF from its inception in 2007 and has participated in the many disaster risk financing products offered by CRIF, which includes tropical cyclone, excess rainfall and earthquake policies.
In 2019, the CRIF introduced what is called COAS, and this product is specifically to assist in disaster risk financing for persons in the fishery sector.
The Deputy Director of Financial Administration highlighted that one of the main concerns of government post the disaster is access to finance. This, he said, is one of the significant benefits of CRIF's policies.
So CRIF has actually pays out within 14 days coverage to the Caribbean countries, including St. Lucia. And we have benefited quite a lot from being a member of CRIF in the Caribbean.
Branford added that CRIF is but one of the many disaster risk financing strategies employed by government to reduce its exposure post a disaster. He further called on citizens and the corporate sector to insure their property and belongings ahead of the hurricane season.
It is always good that private individuals do try to secure their properties, their homes, and their personal belongings in the aftermath of disaster. Because CRIF, the policy that CRIF offers to us is more of a capital nature, restructuring, rebuilding, and so on. It's not going to be filtered in right down to the very local level and the house.
Government is also exploring risk financing, which takes into account health-related disasters such as COVID-19, including disasters which could affect vital sectors such as water and electricity. The World Bank is among other agencies providing technical assistance and financing to St. Lucia in an effort to build resilience as it relates to disaster risk management. For the National Competitiveness and Productivity Council, Glenn Simon reporting.